Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 269 for July 6, 2020. We are recording this at 1 p.m. Eastern Time. And my name is David Cosmeter. I'm the creator of TimingResearch.com. And today we are going to be discussing the S&P 500 and what we expect to happen in the markets this week. So I have arranged for Amelia Bourdeau, Erik Gebhard, and Jim, the option professor, to be here. And Jim will be moderating, so I'm going to go ahead and turn it over to him.
Great. And quite a Monday we have with a lot of action, not only here in the U.S., but internationally. So there's quite a bit to cover today, and it's an exciting time in the market. Before we get started, many of you have been coming before and are familiar with the guests, but some are not. So for those that are not, let's go and introduce ourselves and tell us a little bit about the company. Ladies first, we're going to go with Amelia Bourdeau of Market Compass LLC. A little background, Amelia, and then, of course, a little bit about Market Compass.
Sure. Hi, my name is Amelia Bourdeau. Thanks for inviting me on, and thanks for tuning in, everybody. My company is Market Compass LLC, and I specialize in foreign exchange strategy and strategy analysis and education for the individual investor and for the retail trader. I do a monthly webinar where I look at things from a top-down view. So I approach markets from a macro standpoint, not from a technical standpoint. I do kind of look at technicals as well. You always have to consider those, but I take a top-down global macro view. And my background is global macro. So I worked 17 years on Wall Street at some of the world's largest FX trading banks. I worked in FX trading and sales and also strategy at UBS, at Deutsche Bank, Westpac, and UniCredit Aga. And I also worked at the Federal Reserve Board. That's where I started my career. So I'm a very macro analyst, basically.
Okay, great. And then at the end of the broadcast, you'll let everybody know some of the things that they could sign up for and how to get a hold of you. Next up is going to be Erik Gebhard. He's been here quite a number of times at Ulta. And Erik, a little background and a little bit of what's happening at Ulta.
Sure thing. Well, we at Ulta, we are a brokerage firm in the futures and futures options space. We've been doing this since 1997. I got involved way back in the dark ages in, in 1991. And so that's where I've been since, but we developed some proprietary technology for options trading in particular. Option spreads on the stock indices. We like the E-mini S&P 500 a lot, and that's where most of our volume, although we do some activity in the NASDAQ and Russell Mini as well. So we're trading multiple-legged option spreads, and we use some automation technology and some algos that we've created, behind the magic curtain to help us select those particular trades and then also manage those trades when they hit risk and profit targets. And we use trade alerts as well. We also run some automated futures systems as well. So we kind of have a platform where there's let's just call it a menu of about 1,800 different futures trading systems across various markets and sectors. And a user can then filter and sort through the various systems to find those that they find are appropriate for them, based on their risk and their tolerance for risk and maybe how much capital they want to use and so on and so forth. There's a million different ways to filter and find systems, but that's what we've been doing, and we like to use the options trading and complement the automated future systems and vice versa. And so that's what we're doing.
Good. And you work with the E-mini mostly with the S&P contracts?
Yeah, I would say primarily we're in the three E-mini indices, the ES, the E-mini S&P 500, NASDAQ 100, and Russell 2000. But I'd say most of the volume we work with is in the E-mini S&P 500 or the ES, and that's just really where most of the volume and the depth of liquidity is.
Well, on Mondays, we come out with a couple of questions that the listeners would like to hear about generally. The first one is, where do we think the S&P best guess will be on Friday from the opening today? Now, today you're looking at an opening on the S&P of 3155, so you've got a head start of 20 points if you want to say up. But from where we opened today, 3155, Amelia, how do you feel about between now and Friday? Amelia? Eric?
I'm back. Sorry. Hi.
Oh,
Hi.
okay.
I apologize for that.
No, no big deal. Did you get the question?
Yes, I did.
Okay.
So I think we'll be, I think we can be higher. It's really tough right now because this is a very headline-driven market in one way, and also, as we're seeing today, a very international, like follow-on price action is what we're seeing today in the market, with China equities up so strongly, that following into the European session, and then that following into the U.S. session. So we have a very supportive background for risk on into the U.S. market. The New York trading session today. So it kind of depends on, what happens internationally as well. And there's a lot of risk internationally, but there's also a lot of, I think, support internationally for equities. And that means that, the Europeans have had good time, discussions are underway, and they'll resume in mid-July about the joint recovery fund. So that's been very constructive for the euro and very constructive for European equities, on the hope that might pass, or they might get a deal done by the end of July. You certainly have the ECB, taking, monetary policy actions and providing liquidity to the market, as is the Fed, which is very constructive for U.S. equities. Here, we have a Fed backstop, and Powell has repeatedly said, he will basically do everything he can that the Fed is allowed to do to support the market and provide liquidity through the pandemic. And that's very similar to what Mario Draghi said in defending the euro back in the European and Greek banking crisis. He said he would do whatever it takes. So, central banks, G10 central banks at least, are on board to stabilize markets. And so that just creates a very supportive background for equity. So I think we can be higher, by the end of the week.
Okay.
Yeah.
All right. And Eric, what's your gut feeling on it?
I agree with with everything that was said. And having said that, though, I think just looking at some of the shorter duration technicals, some of the basic baseline indicators like the RSI, we're showing a little bit of divergence on some of these intraday charts on these shorter time frames. But
right.
I would say very minimally lower, maybe 3140, maybe touching some of these moving averages. There's a 50-day moving average around 3140. So not too much different from where we are, but in the longer run, if you look out a few months from now, I would hate to try to step in front of this and be a short seller.
Yeah, but I do agree with you. I did notice that the RSI was diverging on some things, and sometimes that can be important, sometimes it's not, but it's certainly, it would be a yellow flag at least, right?
Right, absolutely. And if you look at, just all of last week, we had a tremendous run. And, even with that being said, there's a lot of momentum, and there's everything, including the kitchen sink, being thrown at these markets from all across the globe, from whether it's fiscal stimulus, monetary stimulus. You've got the fear of missing out, the FOMO crowd. There's just so much, and it may not all be healthy, but it is what it is.
Right.
And you don't want to necessarily argue with the price.
Yeah. One other thing they ask on Mondays is not only where do you think it'll be by Friday, but your confidence level on a percentage basis, and also what's behind the curtain as far as things that are coming up this week that could have a major effect on things. Amelia?
I'd put my confidence level at about 70%, 65, 70%. And I know that sounds strange because we both just discussed how supportive for equities the backdrop is, especially with the central banks. And you certainly don't want to stand in front of this equity up move. But the risk events that are, the thing we didn't talk about earlier in terms of risk is really the coronavirus, and whether you want to call it a continuation of the first wave or a new second wave reemerging in a lot of the U.S. southern states, here in Florida, obviously, Texas, Arizona, and you're seeing starting to emerge more in California as well. And, we have the data on this. Miami-Dade County just announced they're reclosing restaurants and gyms. So, if you remember back in March when equities were falling, that was obviously the start of the pandemic, but they most precipitously, most steeply on days that these large closings of states were announced. And one of those states was Texas, one of those states was California. So I don't know if we're going to, we don't know what the pandemic data is going to do. We don't know how the individual states will exactly manage reclosings should further reclosings have to occur. There's also individual corporations like Apple who are reclosing stores, in California, all in Florida, all Apple stores are now closed. So that didn't hit their stock price, but that can hit the economy, let's put it that way. And so if the market kind of turns from an individual equity perspective to a greater, worry about the economy because more states close more things, more sectors, then, that's the biggest risk for equities. Will we get that news this week? I'm not sure. I think that news will probably, if it comes, it'll come in another 2 weeks, simply because the July 4th holiday, we are not going to have that COVID-19 data for another couple of weeks to see, how people manage the holiday in terms of the infection rate.
Do you think earnings announcements are going to be a factor?
No, not as much as the COVID-19 data. I think they'll be more of a factor because I think they've given so many kind of excuses saying they can't really give forward earnings in any meaningful way. And so I think what you're seeing in the earnings data and what you're seeing in actually the US economic data is a lot of volatility. And so that's why kind of markets are starting to look more at alternative data to get more real-time news about what's actually going on.
Yeah, could it be interesting because, we're getting snapback on all the data from when you close the whole thing down and when people restart. You're obviously going to get things in the unemployment report because some people are going back to work because things reopen. But on the earnings, they should be, pretty negative from the Q2, you know what I mean? Because revenues, obviously got hit,
Yeah, and there'll be debate, I think there'll be debate, just like there is in the economic data debate, well, we just got this 4.8 million increase in June payrolls, but the payroll survey week was the week over the 12th of June, and that didn't capture some of the shutdowns that had restarted in the major states like Florida and Texas, which came later in the month after the survey period. And so, yeah, I guess, you're kind of looking at data and earnings that are backward looking, and so it's a little bit tough to infer. Because we're starting to see new closings, it's tough to infer, will that snapback continue? And we don't have those answers yet. Nobody has those answers yet.
Yeah. Hey, Erik, what's your confidence level on possibly up and then down a little bit by the end of the week?
Right. Yeah, I think we'll be just marginally lower. I think we're gonna see a test maybe 31.40. And having said that, how about a strong C- confidence level of 70%?
No, that's not bad. That's not bad. I normally put mine at 55, which means the preponderance of my opinion is one way,
Okay.
But yeah, no, like I say, I think you've got something there because we're having a big Monday and, very exciting Monday, but we are looking at stocks like Apple and Microsoft and some of them that are making new highs. But if you look at the RSI versus the former new highs, they're not tremendously, confirming.
Yeah, there's no, you'd like to see that confirmation, and
Oh yeah,
we don't have that at the moment. It doesn't always work, but,
No.
It's certainly something to
think about.
be mindful of. And, as this market, and when I say market, a lot of times we almost now are just referring to the handful of the largest, equity markets or stocks. So, and I think it makes up, with those five, is it what, 5 or 6, those FANG stocks are making up
Right.
something like, is it 23 or 24% now of the S&P,
Right.
the valuation? And I think it's something like, is it like 50% on the NASDAQ 100? Does that sound right?
And I think when they do rebalancing, they're adding more tech like Cloudera and,
Right.
getting rid of
So,
Hunt Soup or whatever else was in there.
right. All the,
Hunt's tomato paste.
yeah, that, and also mentioning, the COVID headlines. And
Yeah.
I was just reading something earlier today. I saw a headline. I didn't look too deep into it, but the actual fatalities are down tremendously. So I think
Yeah.
where they were in March when, so I think late March or something like that, down 23% from week over week and so on and so forth. So that's certainly good news, but you have the media, I think, and they want to promote, seems to be the more, salacious headlines, about the case rate, and then all the subsequent closings or reclosing that's happening. We're out here in California, and
Yeah.
I think it's kind of, I don't know, you're in California or maybe Florida, for example, and you're not allowed to go to the beach. That's I don't know.
Yeah, I was going to ask you, as far as just observation, I saw on TV Santa Monica had nobody on it, but in Orange County was, San Clemente, Newport, Huntington, were they open? I think Huntington was closed, wasn't it?
Well, they have different ways of, it's very absurd. And
Yeah.
someone said that, well, of course, like different counties will enforce or not enforce
Uh-huh.
those, government, the I guess you could say
Guidelines.
the guidelines from the governor. And or they'll say, well, you can go on the wet sand but not the dry sand. And it's the most
Crazy.
it is a ludicrous. So
Yeah.
anyway, that's just kind of a side
As
note.
you go around, do you see traffic on Coast Highway and the 405 pretty much getting back to normal, which of course we know is bumper to bumper?
Yes. Yeah, I
Yeah.
think for example, I was just kind of commenting to my wife, the other week, wow, things are kind of as busy as they used to be.
Right.
And maybe not so much over the weekend. Maybe it was a little quieter. I did notice in various neighborhoods where I was, just all anecdotal evidence here, but people were very much, if they were being kept away from, let's say, the beaches or the parades or the fireworks shows and whatnot, they were still gathering together.
Right.
So it's kind of tough to keep Americans from celebrating the
Yeah.
4th of July.
And especially a heavily populated area like Orange County, where people are used to being outdoors.
Right.
Yeah.
So
With regards to some of the things that you're focused on, let's get a little bit more about the specialties here. Amelia, you're involved heavily into the currency area, and I have read that some people think we're entering a secular bear market on the dollar. I'm not a subscriber to that just yet because the dollar has held some support, but how do you feel about the US dollar? Secular bear market on the verge, or too early to tell? Or
No, I don't agree with that view. It kind of depends, what U.S. equities do. So right now, there's obviously a correlation in place. That typical risk-seeking, risk-on, risk-off correlation between equities and the U.S. dollar index, where if equities move up, the dollar weakens. If equities are lower, the dollar strengthens. So that is still very much in place, that correlation. And, we continue to see it today with the dollar index, the DXY, moving under 97, the figure, as equities are rallying strongly today. But as I said, as we've all said, it could just take one headline or one huge closing to kind of turn the equity market around, say on the day, and then dollar would strengthen again. And so I just think there's too much risk out there, especially throughout the remainder of the summer and the second half of the year, to kind of say right the dollar off because the dollar is the world's safe haven currency, and it has performed that way throughout the crisis, hitting that huge high that we had in the dollar index in mid-March when equities were falling so steeply. We were above 102 on the dollar index. So the risk isn't gone yet globally, and so dollar as safe haven, in my mind, is still definitely in play.
Yeah. It seems to, that 95 number, and then of course, right around 95, 94, whatever number, seems to be a pretty important spot, because also I was noticing, well, you're not only looking at it technically, you say you do it top down, but obviously you don't want the RSI going underneath 50 if you're bullish a lot. And, like I say, it seems to be on the verge there. So it does have to find some support. As I was doing my homework, I found that the yen still was iffy around this area, but I did see around 111. I got kind of a buy signal on the euro, and I was thinking that if the euro got above like 115, it could even spike. What do you feel about the euro? Because to me, it seems like the number one dog in the fight.
Yeah, the euro has obviously been really interesting, and people have to just remember that the euro is slightly over 57% of the DXY. So it really matters in terms of the dollar index. If you're watching the index only, it really matters what euro dollar does. And it has been supported lately by the kind of debate and positive headlines and positive developments that have come out of that Merkel-Macron joint rescue plan that the EU is discussing. And so they're going to meet again. There's going to be another summit, a European Council summit in mid-July about that recovery plan. I think the only risk here for the euro, if that recovery plan passes and they come to an agreement by the end of July on it, that's going to be another leg up for euro. It's going to be really positive. If for some reason they don't come to an agreement by mid-July, and sometimes they don't, sometimes it just takes the EU a little bit longer to come to a consensus. And remember, August is a holiday in Europe, so they won't be discussing, in August. So it could be put off even to September. And if that occurs, then I think, we'll see downward movement in euro. That'll be quite disappointing for euro, because in my mind, I think the market expects a July deal on the recovery plan to be done, like almost like it's a done deal, but it's not a done deal right now. And we do have to watch in mid-July that European summit that's taking place and see what comes out of it. And so that's the big risk on the downside for the euro, that the recovery plan decision gets kind of pushed down the line. The can gets kicked a little bit further down, and that would be disappointing for euro. It would weaken, and then dollar would be stronger.
Yeah. And I didn't know it was that heavy. So you really have to watch. That's probably why the dollar index obviously is under some pressure, because of the strength in the euro lately, right?
Right. And the other thing you just have to watch is sterling. It's not as large a component as the euro in the dollar index, but their Brexit trade negotiations are simultaneously happening with the EU as the EU tries to debate its own recovery plan. So that's underway too. And the UK needs a trade deal with the EU, and those those negotiations are ongoing. And so we need to look at what comes out of that, because sterling's been a little bit, not today, but a little bit on its back foot overall, because of the hard Brexit hasn't been taken off the table. So they could still exit in a hard way December 31st or January 1st, 2021, basically. That risk hasn't been removed yet from the market. And that's keeping sterling a little bit, people are nervous about, currency traders are a little bit nervous about sterling. It's not their favorite G10 currency, let's put it that way.
No, I don't think they have confidence in Boris Johnson that much either. So, that could be a factor too. Do you think there's any political thing there, because he might have a hard time juggling this Brexit thing and all the other stuff going on in the country?
Well, everything with Brexit really has come down to the 11th hour. So that's kind of what currency traders don't trust. Everything in Brexit has been decided the last minute it could possibly be decided. And so that makes the market nervous, and sterling traders nervous, because markets don't like uncertainty. Traders don't like uncertainty. So uncertainty will always weigh on the market. The other thing we have just completely separate from the Brexit issue is just we had in England, this weekend was Super Saturday. So the pubs and restaurants and a bunch of things reopened. And we have to see how that goes, right? Obviously, in the United States, it hasn't been going so smoothly in some of these larger states. It seemed to go well in New York State. It hasn't been going so great here in Florida. So we have to see how London does, with their reopenings of everything.
Yeah. Yeah, I think the euro is very interesting to watch because also their stocks are starting to try to turn up. So if the
That's true.
stocks go up and then the meetings are fruitful, then you might have something good. But since everyone's kind of betting on the come line, it could be a deal where if those news, that news peters out a little bit, since everyone's leaning one way, you could go
Right.
the other way a little bit too.
Right. So
Yeah.
more mid-July, those headlines you'll start to
I
see.
got you. That's the time frame to keep an eye on, huh?
Yes.
I'm with you. Okay, Eric, with the well, you do so much over there, so let's just tear it apart a little bit. You do the option credit spreads, and basically try to take advantage of obviously the time decay and capture premium. You want to go into some of that a little bit, and then others as well?
Okay, we can do that. Right. So I think that's a good summary. We like to, when we can and when the opportunity arises, for the most part, we like to collect premium. We're only selling covered spreads, and let's just say primarily on the E-mini S&P 500 to make it a little simpler. So, we have a platform. We've created an algorithm, and it will essentially build the spread for us. So, if we're looking at a non-directional strategy on the E-mini S&P, for example, there might be an iron condor. If people are familiar with that, that's fine. If you're not, that's okay too. It's essentially selling an out-of-the-money call spread and selling an out-of-the-money put spread for a credit, and you do that simultaneously. But the big problem people have is they don't know which options to choose or which expiration, and they don't know what the correct pricing should be. And it can be very complicated. And beyond that, we do other spreads that have even 5 and 6 legs. We have a proprietary strategy. We call it the Dragonfly, and it has 6 legs to it. And essentially, you just buy closer to the money call and put to act as additional insurance or as an additional hedge on the strategy. So I think the big benefit for what we're doing and what we offer for options traders is, or really for any traders, would be that you don't have to use precision. We're not necessarily picking a definitive direction at any one time. We're not maintaining a bullish or a bearish stance. It's not a binary type of thing where you have to put on a bull or bear position. So I think that's a big advantage. A lot of these markets, well, at least not in the last week, the market ran straight up, right? But a lot of times you get a lot of choppiness, and that can work very, very well. And then, of course, once you have a strategy or a position in place with what we do, then the technology will automatically monitor that and maintain it. And then when it hits various risk or profit targets, it will then automatically submit that and close out that position for you. So we take a lot of the emotion out of it. I guess that's a big key into what we do and kind of the catalyst behind what we did with this, because over the years doing lots of trading with clients, people become their own worst enemy, and their brain becomes like their own self-destruct mechanism, and they end up just becoming their own worst enemy. So I think you can take a lot of the emotion out, use some automation, use some technology to help you along the way, and that's what we try to do with our Theta Trader platform.
With regards to approaches, there's an assisted approach, then there's a self-directed approach, and then there is an auto trader type approach. Would you say all three are available?
I would say that people use it differently, so it just depends on the client. And we do have a trade alert functionality within Theta Trader. So, and it is different in the sense that it's an interactive trade alert, meaning it's live and connected with your account. So if you receive an alert on your screen, your device, and you like what you see, you just touch accept. That's all you have to do.
I got you.
Most alert services are like a text or an email, then you have to log into some other platform and try to transpose everything and hope you don't mess up. And so that's kind of nice. Everything's integrated with the alert, so it can be very much a very user-friendly, hands-off type of experience. But the client ultimately makes that decision if
Sure.
they're going to, place the trade or not. And other people are more involved, and they're going to kind of customize a trade, or every day there's trades that the platform pushes out. And sometimes people will just take them for what they are, and other times people will modify them, and other times people will say, I'm just going to accept the alert. So yeah, we can work with people at any level.
I've been noticing on the S&P outside of mid-June, where we dropped about 300 points, there really hasn't been much of a drop in the market, maybe 200 points from low to peak to trough since the capitulation at 2200. So the VIX has been very high. So has it been pretty much able to go fairly far out of the money and still get paid?
Yeah, I'll give you an example. Yeah, in fact, the pullback we had on the S&P back in was it what, 3 weeks ago? Was that early June?
Yeah, somewhere in June.
Yeah, that pullback there, and then just in the last like maybe 7-8 sessions ago, we had a couple days where we pulled back. But for example, the spread that we're looking at can be sometimes 1,500 points between the short calls and the short puts
Mm-hmm.
when you have an elevated VIX. In fact, we had a period where it was over 2,000 points.
Mm-hmm.
And you're still collecting a lot of value. With the VIX higher, the
Mm-hmm.
premiums explode. And for example, today we're looking at some what we call our theta trades. Is essentially just a model trade,
Mm-hmm.
and we're looking at somewhere around the 2,600 puts and the 3,600 calls.
Oh,
to
okay.
go
So you're setting up a window.
Yeah, so that's your range,
Mm-hmm.
and that's for the end of month August
EOM.
expiration.
Okay.
So just to give people some idea.
Yeah. Yeah. In other words, you're giving the market room to move.
Yeah, there's a lot of room for error. We
Yeah.
call it the highly technical term of wiggle room
Yeah.
and
Yeah. Right.
margin of
Well,
error there. So
right.
that's a typical example in this environment of a spread that we might place.
Yeah. And options are all about time and price. And so, the time is relatively short term. So the time decay should be fairly reasonable. And then the prices, based on where it is now anyway, seem to be somewhat out of the money. So those are the two factors you're kind of managing.
Right. Proximity and time, theta decay,
Mm-hmm.
and if even if you have a market moving in one direction, as long as it's not going 20% in a week, those kind of wide spreads can still work.
Yeah. Yeah. With regards to other markets, I've noticed agriculture has finally got on the bicycle, particularly in soybeans. Do you see a lot of runway there, or do you think this is a pop and fade?
We're the main approach that we have to trading some of the traditional commodities of late is with our automated systems.
Mm-hmm.
So I can't really speak in depth. I haven't been following the
Okay.
fundamentals or technicals so much,
Right.
but just it's one way of punting, I guess, on your question to say that
Yeah.
we're using some automated systems to trade
Yeah.
in a lot of these additional other futures markets. And
Yeah.
if that
Yeah. In other
helps
words,
answer the
the answer
question.
to the answer to the question is that you have some shall we what do you call those systems
Yeah,
that
algo
are
systems.
algo systems that are following these markets, and rather than you opining, you'd refer it over to look at what the system's saying.
Right.
Yeah, and
Yeah, that's a good way
that's
to look
not
at
punting. That's a very legitimate answer.
it. Well, here, I'll give you just real quickly here, and I'll be
Yeah.
quiet. But you mentioned soybeans, and I'm looking here at a couple of soybean systems,
Hmm.
and I'll just pull up one here, just
Because
for
there was a crop
example.
report that said something positive, and that got it out of its funk, which has been between 8 and 850 or so, and now, it looks like it wants to go someplace, but looks are deceiving.
That's right. That's right. Here's a soybean system we're trading. It's a swing system, and it's trying to capture maybe weekly moves, for example, not day trading, but it might try to sink its teeth into a move and hang on for a week at a time.
Mm-hmm.
And at the moment, it is. I will pull that up. At the moment, it's flat, but as of earlier this month, it was actually short.
I got you.
But it's actually doing very well this year. You know, if I report a number here, I'll have to use the caveat that, you know, past
Right.
performance is no guarantee, but year to date, that particular system is up 59%.
And that
So,
system has more commodities in it than just soybeans, which would explain the result.
well, this one system I'm referring to is only soybeans.
Oh, okay.
And this system trades on a platform that has about 1,700 different systems available.
I got you. So
Yeah.
the person who looks up there could look at either a short-term trading system or a day or a swing. He could also do more position trading. They have a number of systems, or are they all a day or swing?
Right, right. There's either an intraday approach or a swing approach.
Gotcha.
And within that, of course, you can search and filter for a soybean system or crude oil or NASDAQ 100 or, you know, the euro, you name it. So really, there's only those two types of systems, though, on the platform, intraday or swing. Some people don't want to be in the market over the weekend,
No.
so they might only focus on the intraday
Right.
systems.
Yeah, a lot of futures traders are concerned about that gapping thing, so they'd rather go home flat and play again tomorrow.
Right.
With regards to the metals, is there anything, any input you'd like to throw out there? Obviously, we've gone up to this 1800 level, it seems like about 19 times. And any feeling on either copper, gold, or silver?
Well, I'll just speak briefly on gold, for example, and silver, but I know there's a seasonal right now with a long silver and short gold spread, something that's worked I think in the last 13 or 14 of the last 15 years. And once again, you know, there's no guarantee of future results, but silver's been certainly getting our attention, and gold too. It was up above 1800 for a time, but I think you have to be long those markets. If you ask me, I don't think we've seen the highs.
Yeah, there's a lot of interest in it. There's no doubt about it. Well, let's turn back over to Amelia. And Amelia, as we were talking with some of the more specific areas that Erik deals in, could you go into some of the more specific things that you're doing with the currencies?
Sure. So I just wanted to say I'm not a big follower and don't usually trade commodities, but yeah, I like gold higher as well. And I approach that from an event risk perspective. Once again, that it's also considered a safe haven. And I just think there's a lot of event risks, especially coming up in the second half of this year. We've been through a lot already.
Yeah.
This year's not over. And we have
like an election too, right?
Yeah, we have the election. I mean, and almost anything can happen. They even speculate at this point because everything has just come. There's been so many. I will put it in an economic way. So many external shocks that we have. So they may keep coming. We don't know. The other thing we're looking at too is, just from an economy perspective, the unemployment benefits are starting to roll off those extra at the end of July. So we're going to. I think the market is expecting pass another fiscal package, but of course it's not a done deal. So we need to wait for that. And we have that kind of fiscal cliff coming. The same thing with the mortgage deferrals, the furloughs. So are those going to continue to be extended, or are they rolling off, and will we see any impact on the U.S. housing market? I know there's a structural undershortage of housing nationally. But, things like that just make me nervous when you kind of have these dates and is something going to happen, or will we continue to see, increased fiscal support? And that's something that Powell, chairman of the Fed, has been very forward. Almost any chance he gets, he says the Fed has lending, not spending powers, and we need more fiscal stimulus. I'm paraphrasing him, but that's what he said over and over and over again. So, we need to see if there's another fiscal package coming in the form that it takes. We also have, obviously, the presidential election, and this cycle. The presidential election cycle is just so unlike any other one because we're not really holding live debates, or maybe there'll be, the candidates won't be together, and how will this be covered by the press? And, the RNC is going to be here in Jacksonville, where I am, at the late August, but we have a very like a clustered breakout here in Jacksonville of coronavirus currently. So can we get that under control before the RNC? And we also have a mask policy in place here. So it'll be interesting to see what exactly happens with that. There's just no way to tell. And so that's why these safe haven assets are going to continue, from time to time to be in demand on especially certain days. And you can't just write them off, not yet.
With regards to tactics, would you say most of the things you're doing is before, a day trade and it's done at the end of the day, or is it swing? Or and are you using just the contracts, or are you using options and the contracts? Or?
I usually trade spot or futures, so I'm not a big options trader. So I usually use, as I said, spot or futures, the near term contract and futures. And what I do and what I hold monthly and then give updates in between the monthly webinars is I'm an identifier of event risk. So I identify, as we've kind of been talking about event risk, I identify dates and times and, and that things can happen that the market is watching for. And then I identify the asset classes or, the specific currency pairs or crosses that can be impacted if one decision goes one way or a decision goes a different way, and what, give you trading scenarios around the outcomes of what will happen, and then update between the webinars. So this view that I give is very comprehensive. It kind of goes over macro themes. So those are themes that drive the market. And then we track those themes, and tracking those themes creates trade ideas. So how those themes develop and those event risks develop, that's where I draw my trading ideas from. So it's a lot of event risk that we look at in trade, and we do it on a shorter term basis. I would say intraday to maybe 3 days. And I agree with what you both were talking about earlier, just very hard to hold positions through the weekends. And I think you see even institutional and hedge funds, when I was on a trading desk on Wall Street, it was very common, especially after payroll Friday, to, take your positioning down. And so we would see a dramatic decrease in trading on the desk, like say post 2 p.m. on a Friday, because, they'll ramp it up in the Asia session Sunday night. But yeah, in these markets especially, you don't want to have a position through the weekend. That's tough because liquidity is bad and Asia can open, and, something could happen on the weekend, and then it can be very tough. So I agree with that, at least.
When you were doing your analysis, you look at things like economic reports, the PMIs, how much stimulus the country's doing, what their retail sales numbers are. Are you going through all that kind of stuff, or what more type of research on that side do you do?
Right now, economic data isn't so much driving the markets. And I think a lot of traders, we kind of talked about at the beginning, like we don't trust the economic data. So we had a big drop, obviously. Now we have kind of a big bounce back, but that may not be capturing in real time what's happening as reclosures start to occur again, especially here in the United States. So it's important to be, Payroll Friday is always important. Payrolls are always important, and they almost always move the market. But you've been seeing even economists from banks trying to forecast US data have been really off across all banks. And I'm not picking on them. That's just how hard it is right now to forecast these data. And so I start with more macro themes, meaning, what is European Union doing in July? What are the Brexit dates in July? What is the date that Congress can decide and pass a fiscal package? When are the unemployment benefits rolling off? Because those are the days that can create dislocation. Some type of small dislocation even in markets, and that's when you can capitalize on those movements. And so even if you're a technical trader and you don't follow macro, these dates should be helpful to you, because the market or the asset class you're watching, whether that's an individual equity, an equity index, or a currency or a commodity, they could be more volatile during that time. So your levels that you're watching are more likely to break on that day at that time than another one. So you should be aware of that going in, the day.
And you use a little bit of seasonality, and you also use the calendar. Those are two big things.
Yeah, as you said, I use the economic release calendar, but that's not as pertinent as it normally is because the circumstances are so unusual.
Right.
I watch the policy calendar, the central bank calendar. Seasonals are important. And the other thing that's driving us is, I do watch very closely the coronavirus reporting and the states closing and the states reopening, and looking at the hospitalization pressure, because hospitalization pressures, that's what really leads to states closing things down when hospital pressure gets too much. And we saw that very much about a week and a half ago with Texas. There was a lot.
Yeah, and Arizona, I think, is also getting kind of all filled up.
Yeah, so those are important to watch. I mean, not just from a health perspective. Obviously, if you live in those states or those counties, it's very important for you to know that. But what's important is, from an economic or trading perspective, is if the hospital pressures get too much, then that typically leads to closures, say, in that county or that state, and then that can impact, say, broader equities or broader equity sentiment on the day that's announced.
And as far as vehicles are concerned, we know that the dollar index is a big one, and of course Euro's got good volume, and but British pound's in there, Canadian
dollar, Aussie dollar. We should talk about Aussie dollar.
I was going to say, and Aussie looks like it's trying to turn up, isn't it?
Yeah, it's had really strong correlation with U.S. equity. So we did have some negative news overnight in Australia. Coronavirus cases are rising in the state of Victoria, which borders South Wales, and they closed the border between those two states. Just like, we're having quarantine here between some U.S. states, they closed the border between those two states, which is pretty important in Australia and a little bit unusual, I think. So that was pretty negative news out of Australia last night, and it didn't impact Aussie dollar. Why? Chinese equities are rallying,
right.
equities this morning are rallying. So, Aussie is almost right now a pure beta play. It's just, I think Aussie intraday is one of my favorite trades right now, because largely it just correlates intraday with, U.S. equity markets if you trade during the New York trading time zone. And then I like to take it off at the end of the New York trading session. I don't like to leave it on overnight in Asia in case we do have some announcement in Asia that, impacts it negatively. But that's a really good intraday trade, as is Kiwi dollar. It's not as correlated with U.S. equities, but it is correlated as well.
Yeah, it seems like they're going hand in hand. You don't do too much with like the Rand or the Mexican peso or anything along those lines?
I don't trade the Rand simply because when I was at UBS, when I worked there, they were the largest, and in the New York trading time zone, they were the world's largest traders of the South African Rand. So at one point when I was there, 2/3 of the world's South African Rand came through our trading desk, and it was traded algorithmically. So everything was how they traded it was completely algo. So never attempt to beat an algo, never stand in front of an algo, never challenge an algo. So that's why I stay away from South African Rand. Mexico hasn't been on my radar screen, but yes, I mean, Mexico is liquid, and Mexico is one that I think, were you to trade it, you would also want to watch carefully the intraday correlation with the S&P.
Yeah, their economic news hasn't been very good, but sometimes that's the end of the story, not the beginning, right?
Yeah, just watch the intraday correlation, I think, with S&P for Mexico as well, because their coronavirus news is quite bad right now as well.
And the South African Rand is not too much connected to the gold prices, because they're a huge gold producer, right?
Yes.
But I see it's collapsed while gold has gone up.
Yeah, just EM in general EM currencies in general aren't doing too well. Dollars.
Although I notice EM stocks today are up like 5%, so maybe that might be something
to watch. It is the equity flow, so the capital flow, equity flow from out of developed into emerging is important to watch, and maybe not immediately, but that's something very important to watch. And maybe the U.S. equity markets, equity indexes will start to become a little bit on their back foot if U.S. investors, focus more internationally, if they put more money into European equities or Chinese equities, or, just EM in general, which they may start doing. So
it looks like it's trying to get started, and it could go from a skip to a run,
Yeah. So definitely. So we need to, I'm laughing because I'm not laughing because it's funny. I'm laughing because it's so interesting right now how the Fed policy and everything is so supportive of a backstop to U.S. equities, but U.S. equity investors could could decide to, partially put their money elsewhere. And if they do, take, certainly some of the upward trajectory off of US equity indexes. So that is very important to watch. Movements into EM and movements into European equities, especially.
It seemed like every January since 2018, when it was very high, they've been telling everybody to get into EM every year, and every year it's been a bad idea, but maybe this is the year it might not be such a bad idea.
Yeah, we'll see. I mean, it's tough. EM still has a bad track record right now, unfortunately. Coronavirus really impacting places like Brazil and Mexico. Maybe that'll turn around. And also, you've seen the charts. They're all over Twitter, all over FinTwit, kind of comparing the peak and trough of coronavirus cases in Europe versus that in the United States, and how Europe has flattened the curve and the US, has not, nationally at least, flattened the curve. And so maybe investors will start taking a look at that. If US cases nationally continue to trend higher at a meaningful rate, they'll turn to Europe instead. So yeah, we'll see. These things are not predetermined, and they're all points that we need to be monitoring. They're all what I call macro themes that we have to watch the development of capital flows into Europe and EM, the development of how coronavirus cases is doing globally as well.
Now, Erik, you've got at AltaVest quite a number of technological features that you bring to the customer's benefit for them to take advantage of. If we could just describe different types of customers: self-directed, needs some assistance, wants to do automated trading. Do you pretty much have some type of a system that they could look at and get some assistance out of that?
Sure, absolutely. So, a typical, let's say let's just run through an example. Someone might find us in some way or another, maybe they're referred to us, and they may have an interest in options trading, and maybe they've never done futures options in particular. I think we could all agree that when we speak about options trading, you see all the guys on CNBC with their ponytails and all these option trader guys and talking heads and pundits. They're all talking about chasing the next, hottest stock with options. That's stock options. Of course, we're in futures options. It's a distinction with a difference, I guess, wherein we think it's a preferable instrument, actually, especially in the ES, the volumes in terms of option volume. I think looking at the CMA group, they look at all the S&P 500 options. I think it's something like 83 or 87% of all the options are the E-mini options on the S&P 500. So that's really the space you want to be in. That's where you get the depth and the volume and liquidity, and they call it granularity. So if you're looking to build a spread, you have those strike prices available, very, very deep out of the money. So you're not, your hands are not tied due to a limit on strike availability. And that's going to happen a lot if you're trading stock options. That's why we like to trade in the space we're trading. So we might bring someone on and try to explain that to them. And a lot of times people really like that idea. They like that concept. And, we can show them that they don't have to be someone that has 10 years of experience. If you know what an option is an option. There's options in real estate or other assets, and an option always works the same way. We're just applying it to a different, really a different market. So, we can sort of overcome that presumed or perceived learning curve, which really isn't there. If someone knows what an option is, they can do what we're doing. And even if they don't, we have training and we have videos available on our platform as well that help people train. And we run through webinars, and that's kind of a difference too. So we're not a big box kind of brokerage where we just have chat bots and online only education. I mean, we're real people. We talk to people, and we set up screen sharing sessions, and we make sure they understand what they're doing, and then we explain, of course, once they understand the option side of things, and if they want to augment that, so to speak, or complement that, then we introduce them to the automated or the algo systems. And you had mentioned algo trading, and you don't want to walk in front of algo trading, and we agree. No. I think I read an article in Seeking Alpha. I think I've used it in a webinar or two lately, but 80% of the U.S. equity market, I believe, is dominated by algos. I think it's 80%, and I don't know where they're getting that number from exactly, but I would think that's believable.
It seems like the algos, to me, outside looking in, just wait till they think one side or the other is vulnerable. Like obviously when we go into a capitulation down at 2200, they can see the volume, the advanced decline line, and they have to figure, listen, if we start taking this thing up, anybody who's short is just going to start covering.
Right.
Or if it's way up and I can see there's maybe a divergence on the RSI and we've gone way, way up. If we start hitting this thing, I don't think there's buying behind it. So I think they try to look for the vulnerable side and then they press it very hard.
Yeah, absolutely. And, you would think that it almost becomes a self-fulfilling prophecy, I suspect. And, and one of the things I do look at and not necessarily trade off of, but I think it's good to be informed is the CNN Fear and Greed Index.
Okay.
We talked about algos, and it's a sentiment indicator, but it's based on quantifiable data. It's not just subjective opinion. So I think there's 7 or 8 variables in that index. I don't recall, but they look at market breadth and put call volume. And in fact, I just pulled it up here. Yeah, market volatility, momentum, junk bond demand, which is interesting.
Right.
Looking at the stock and bond returns, safe haven demand, so on and so forth. But that's a great contrarian indicator at these extreme peaks and troughs. I mean, you look at and I think, getting back to what you're saying, I think in some ways that's how a lot of algos are devised. I mean, they're probably assimilating thousands of variables, and at some point, they all tend to look at the same thing at the same time, and, and it all just sort of feeds on each other.
I think they look at when the volume chart's drying up, and then they know the market makers are the only guys on the other side, and they say, listen, if we throw 1,000 contracts in here, 100,000 contracts, this guy is not going to stand in front of that. He's going to drop his bid if it's a week up there, or he's going to raise his offer because, once the volume runs out, you have people who make markets as the guys down there. And as you saw in junk bonds, once they started collapsing, the dealers didn't put any money in. They figured the Fed's printing money, let them buy this junk.
That's right. They just
I'm not going to put my wallet out there when the Fed can give me phony money to buy it.
Yeah, well, absolutely. So there's definitely some, I guess you could call it some gamesmanship involved with all this too. And that doesn't make it any easier on the average retail trader, that's for sure. But we're kind of in the alternative space, so we're not we're not necessarily your typical sort of investment type of opportunity. And if people can do what they're doing, and that's fine, but we think what we're doing here with sort of that alternative universe where we're not really always picking market direction, and we have strategies that don't rely on the market always moving higher. I mean, if you're the typical person with your business channel on, no matter what channel you're watching, seems like there's a replay button where everyone's always going to be talking about how bullish they are no matter what. And I guess in the long run, over 100-year timeline, you'll be right. But but in the meantime, I think there's some other ways to approach it.
Yeah, and if the people in stocks are familiar with how a call works and how a put works, then you've got to, when you come over to your neighborhood, you have to talk about, when do the markets open and close, because they're not all uniform. And then you got to go into what the size of the contracts are and the requirements. So there's dots to fill in, but coming in with a experience on how the actual calls and puts work is a nice starting spot.
Right. There are a few logistical or operational nuances, but other than that, if you get the concept, then that's 90% of the battle, right?
All right, we're at the top of the hour. I'm going to let Amelia again reintroduce herself, and if you have any special offers from Market Compass LLC and how to get a hold of you, Amelia, this is a great time to let us know.
Thank you. So yes, you can find me at www.marketcompassllc.com. and you can learn more about myself, my background in the company there. You can also go to our webinar tab, and that's my main offering, as I kind of mentioned earlier. It's in a global event risk webinar. It's live. It comes with a recording. It takes place once a month, and in between you get video updates from myself, depending on how the subjects we talk about and the asset classes that are moving. You'll also get some trade recommendations with that. And so these are very top-down issues and major event risks type we talked about, Brexit, the trade negotiations, the fiscal cliff in the US, things like that, and dates and times to watch. So it's usually a very lively discussion with everyone who's on, and you'll walk away with some good ideas of what to look for. And even if you're a technical trader, this can help you by identifying, as I said, the days and times that the markets, equities especially, could be more volatile. The main trade recommendations are G10 currencies, and that's where you can find my main offering on the webinar tab on my website. You can also follow me on Twitter at Amelia Bourdeau. And if you like intraday updates via video, I do those on Instagram at Market Compass on Instagram story.
That's great. That's a lot of ways to keep in touch, and marketcompassllc.com is a good place to start and get acquainted.
Yes, for sure.
Okay, Erik, again, just a quick introduction again, and altavest.com. Anything you want to offer? This is a good time.
Right. Yeah. Thanks for the opportunity to have me, and that was great listening to you as well, Amelia. And we trade unique option strategies as well as using algo systems on futures markets. So we'd be glad to have you take a look at what we do. You can take a look at us at altavest.com, and there's a link right on the home page where you can receive free trade alerts. So if you'd like to get a demo of what we do and the strategies that we're using, that's probably the best way to do it. And we can also have you log into the platform and walk you through exactly what it is we're doing and why we do it. And that's probably a really good starting point, is to get that demo. And then also we can talk to you a bit more about the automated futures trading systems. So that works across currency markets, traditional ag commodities, precious metals, financials like bonds or notes, or even the stock index futures, and even overseas markets like the DAX. The German stock market index is really a very popular market for these algo trading systems as well.
Perfect. Okay, so there you go. And I have a weekly update that I send out by email. So it is free of charge, and I go everything from the stock market, bond market, and crude, gold and silver, as well as the grain. So if you'd like to get the free weekly update, I'm at optionprofessor@gmail.com. Right now, I'm going to turn it over to David. Thank you guys for being here. I think we had a great conversation, and look forward to doing it another time.
Thank you.
Thank you.
Yeah, thanks everyone. Great discussion today. So just a quick reminder to everyone listening, be sure to subscribe to Timing Research on YouTube or your favorite podcast directory or app. And you can also go to TimingResearch.com to get access to any of the past shows and reports, including the show, as soon as I can get it posted. So just want to thank my guests again for today. Amelia Bourdeau of MarketCompassLLC.com, Erik Gebhard of altavest.com, and Jim, the option professor, at optionprofessor.com. Thanks, everyone.
Thank you. All right. Bye-bye.